Hi, everyone, and Happy New Year to you. This is Mish Schneider from Market Gauge coming to you with the January segment of your Daily 5, sponsored by StockCharts TV. And it's a very interesting time in the market right now because we've started out optimistic on the year, and yet there's still a tremendous amount of headwinds, particularly in the area of inflation. So what I wanted to do was introduce you to my outlook. If you haven't already received a copy, How to Grow Your Wealth 2023, here is the link, www.marketgauge.com/Outlook 2023. It's over a 60-page with 51 charts, real kind of deep dive into all the different areas that are going to affect the macro and down to the micro, along with picks, many of which are already up and doing quite well as we've entered the year. So please take a moment and download it and get your copy. So for today, I wanted to cover some of the stocks that I actually talk about in that report and just kind of get a little bit of an idea of why I've chosen these and also how they look in the charts and what would be actionable now. One must remember, of course, that we're also entering into earnings season. Now that we've actually gotten through the CPI, of course, then there'll be Fed talk and everything else. Really, this is going to be a year where you have to have some kind of a plan, obviously, but also really start to understand risk reward and charts, because if there's anything that you learned from 2022, hopefully it was to not marry a position that we could be in a very stubborn trading range to be continued, and yet there's always going to be pockets that will outperform and underperform. So we're going to look at ACWI, which is an ETF that is global ETF. We're going to look at TTEK, which is solar and cloud. They're working on alternatives to lithium batteries. Teva, which is an Israeli pharmaceutical. Northrop, which is defense stock. And OneSpaWorld Spa, which is a service luxury brand, which has more to do, a lot actually to do with China. And then regional banks, because bank earnings will start very, very quickly. So let's go to the charts. Okay, so we're going to look right here. First of all, what I'd like to do, if I have time, and I'm going to move a little quickly here, is go through both the daily and the weekly, because what's really interesting, and as Dave and I discussed on Final Bar, on the daily charts, things look amazing. And on the weekly charts, a lot of them, not all of them, look like we're just still having kind of a bear market rally. And we don't really know which is going to prevail. But if we're looking at this chart right here, we've got the 50, the 200, and I've added the 10-day moving average in here. Obviously, our ACP plugins, the leadership against the benchmark, and then we have our real motion momentum indicator. And in this case, you can see that we've cleared the moving averages. However, we're not in a bullish phase because the 50 is still under the 200. And of course, you can see some resistance we have here going back from December at 90. And this is a daily chart. So it's well outperforming the SPY global. And a lot of people are thinking emerging markets, which this is about 85% of emerging markets in here, including some tech, by the way, will outperform the US markets. We'll see. And we're also getting into resistance and momentum, even though we've had a bullish cross in the momentum moving averages where the 50 is over the 200. The price and the momentum of the price is over that, but we still are running into some resistance here against this Bollinger Band. So it's going to be interesting to see whether we can get through 90. And of course, you really want to see this hold up at around 87. If we just look quickly at the weekly chart, you're going to see a same kind of thing, although the momentum is actually weaker. And this is what I'm talking about, in that if you look at the momentum on the weekly chart versus the daily, this has not had a golden cross and is still under the moving averages, even though we're still doing better than the leadership. And if you look at the weekly moving averages, yes, we've cleared the 200 and we're sitting right under the 50 week. So this is going to be a good chart to watch. If the market continues to stay perky, you have a great opportunity here, particularly, as I said, if it can clear this 50 week and get through 90. So the next chart we're going to be looking at is TTEK. Now, this is industrial waste and disposal services. So yes, it has to do with batteries, but there was also news about them having some kind of a partnership with Google. At least I thought I read that yesterday. And of course, now we're looking at the weekly chart. So let's start with the daily. And if we look at the daily chart here, same kind of thing. We're clearing the 200-day moving average, getting a little bit of momentum here. Obviously, some overhead resistance, well underperforming the SPY. So not a leader by any means in this area. And also, even though we had a mean reversion and we're holding well in momentum, we still have some work to do. So this is a type of stock that I would keep an eye on. I'd like to see some more consolidation and a power up through the 50-day. And if we move to the weekly chart, you can see the same thing. We're just scraping above the 50-week moving average. And that 50-week moving average really has to hold in order for this to get good. It's doing better in the performance on the weekly moving average. And again, same thing with momentum. So this is something that we're looking at because of the electric cars and because of the fact that they're using an alternative. But again, still has to prove itself. Now, the next one is a pharmaceutical that's already made somewhat of a move, which is great. So this here is a weekly chart. So again, let's start with the daily chart. You can see in all time frames, this thing has just taken off. They had a big lawsuit against them because of opioids that was finally settled, that they can pay over the course of like 11 or 14 years. So that is really, once that was settled, this thing completely took off. It's a generic pharmaceutical company, and obviously part of the biotech space, doing very, very well outperforming and doing well in the momentum. So this kind of has skyrocketed already, but if we continue to just sort of sit and settle here in these areas, you could get more upside. Now is a good time to look at the weekly chart, because you can see if we go back a little bit in time, we've been up here before. So clearly we're going to have to get through this area right here of 1134. And if we do, we could probably go up at least another $1 or maybe $1.50 or maybe even more. Your risk at this point, though, would be a little bit more arbitrary, probably why I would say it has to hold 10. Another one, now this could definitely be setting up, but it's a little premature right now. Again, let's start with the daily chart. This is Northrop. What I really like about this chart is, guess what? It went right down to the 200-day moving average, and defense could definitely be something to be an interesting sector as we move on. It was really hot coming into the end of the year, and now we've had this big move down. So underperforming, momentum not great, but this would be one that I would be interested in if A, it holds the 200, and B, in the momentum indicator, it has a mean reversion trade in that these dotted lines cross back over the Bollinger Band. At the same time, we're holding a key moving average. And if we just quickly look here at the weekly chart, you can see that at the same time, it's heading down to the 50-week moving average. And in this case, the momentum looks a little bit better, but it's breaking down under the 50. So I liked in this particular chart, really keep your eye on about that 485 level, maybe 480, see what happens with the momentum. And if the momentum starts to flip up, then you have a potential very low risk buy. The next one is OSW. And again, this is more in the services, travel, tourism industry, which is an industry that's been doing very well. What's so interesting, I'm going to start actually with the weekly chart, because it's far more interesting in this case than what we've seen with the daily chart, in that we have tested now this 200-week moving average. Look how many times, going back to 2021, over a year ago, like 2 years ago, actually, we are not able to get a weekly close over this 200-week, which comes in at around 1040. It's trading as I'm speaking to you right now at 1032. So it's trying. Maybe it has to power up, do a little bit more work, and then get going. But this will be a stock that we will definitely want to get into if we get that weekly close over 1040. And if we move out a little bit, you can see that you have a pretty good risk. You can just use really basically the low of this particular week. And if we go all the way out, this is a stock that is relatively new, but at one point was trading up at 1750. I would say 1250 might be your better place to look. And last is KRE. This was something I discussed with Dave. We'll take a look at the daily first, and then we'll go to the weekly. So on the daily chart here, you can see that it's outperforming, but look at the momentum. We did have a golden cross in momentum, and it's getting stronger with ahead of bank earnings. This was a big concern for me in the market. By the way, you want to see a beautiful exhaustion gap to the downside. Here's a great example of that. But you can see how this has tried to get through this 200 so many times and can't make it. And now it's been doing a little bit better, since 60 was an area that David and I talked about it clearing, and it has. So it has a little bit more work to do on the daily. Basically, after the bank earnings, I would be looking at 62, and then 60 could be a good risk. And if we just take a quick look here at our weekly moving average, this has held on for dear life, this 200-week moving average, still slightly outperforming the benchmark. And on the momentum, and this is why I say it's still a bear market rally, a rally in a bear market, because if you look at the momentum, even though the momentum, you had the 50 cross the 200, the momentum is still under both the moving averages. So here basically is a situation where if we break down under 57, I think we're going to be in for a much bigger correction in the market if we hold and get through 62. Obviously, we have the 50-week here to contend with next, but we're going to take it measure by measure. And then, of course, it might look better for the overall market. At least this rally could sustain for a bit longer. So I hope that's helped, gives you a little bit to look at globally in terms of solar, in terms of pharma, defense, kind of a broad spectrum look at different areas and different actionable information to keep your eye on over the next few days. And that's it for now. Thank you so much for watching. You all have a great weekend. Bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.